Hello everybody and welcome. It's May 10th, 2015. We are, closing in on, halfway through this particular quarter, moving in on, half a year and another month and a half. Earnings are up. Markets really were flat last week and basically saved by the bell one more time. I don't know how many times we've seen that. Up on the year, positive again on the week. For the most part, NASDAQ was the only one that succumbed to a little bit of negativity. And, you can't argue with a market that just seems to always find a way to pull it out, right? That seems to be what continues to happen. The real focus, as it has been, really is about Europe and Asia. Europe extends lower again, but it appears to have found the range. And so if I pop over to like the CACs and look at it, we had the pullback, off this high. So we had the high, made a new high, and then had some serious pullback days, and eventually, broke a swing point low here, had already broken this one up here, right? And then in this congestion area that we were looking at before, in this big bar, comes in, finds support, right, does a hammer reversal, has higher volume, which says we're probably going to come back down, and then gets a big spike back up. The test now, there's actually a couple things that have gone on. One is you broke this swing point low and you immediately got back over it, right? So you've basically said, okay, this isn't going down, it's going sideways. And that's kind of what we thought it was going to do. We thought it was going to consolidate. The second part of that is now the bounce actually could take us back up to do a retest regen off this bar. The low there was 513271. We got to 5133, so we've tested it once. This would be the second test on the way back. It makes the odds a little bit better that you can break into it, but there's certainly no guarantee that you will. You've got big volume up here at the highs. I expect it's going to come back up there at some point, test that area, but it's a range trade right now. And so the question is, does it pull back up to the top of this range, or does it fail, right? Or does it fail here, trying to get back to it? And so, when I look at this, the test is going to be right here. It's going to happen right away. If it does, then we're going to watch how it attacks this low and whether or not it can get into it. I suspect we are going to see it come back, and we're going to be able to buy it back down here somewhere, and we're going to have some orders down on the European market as a result of that. If we look at Germany, Germany's kind of the same situation. Also got a nice big bounce, and these bounces came off of mostly the fact that the bonds quit selling off so hard. And so again, it breaks a swing point low here, right, and there. That turns it negative, comes down, tests this low, has volume again at the lows, says it will probably come back, getting the bounce. Now this one, the German market is in the retest regen zone now. There's an overlapping one here. So I suspect this area here is going to be the hard area to get over. And so again, we'll watch and see how it does it. My expectation is that it will pull back, and that we'll try to buy that pullback. And now we'll be able to buy that pullback in a bigger way. I was going to draw in the ABCD. So in other words, if we see, actually it would be from here, if we see this come all the way back up, right, it's going to nullify that ABCD structure. Now what we haven't looked at, and we can look at it now, is we can look at it on a weekly, and any kind of a bounce that gets you back over this high this week and doesn't set a lower low, right, would set up the potential for an ABCD structure on the weekly. And that's what we'll be looking at next if it does. Again, I don't think we're going to come back this deep, but then again, it's possible. This is the bar I would be watching on any kind of a push down. I think this would be the ideal buy in this area up here, which would be that ABCD structure if it does it. Now, again, we don't know that it's going to go that deep. All we can do is look at it and project and say, okay, here's where it could go to. We'll know more about that if and when it tries. So we'll just have to watch and see how it plays out. The same may be true for China on that first leg down. I still haven't, updated these charts. I've been doing a lot of other things, but this came down. The Chinese market came down. It didn't have volume as it did it, right, compared to what it was up here. And so we got volume at the top. You get a decent pullback. I mean, we went from 46 almost to 41. That's 500. That's 12%, believe it or not. So a decent bounce out of here should be expected. We are in Asher, which is trading this market. The bar we're going to be looking at is this bar. If it can get into this bar, then we're going to try to ride it up into a test of this area here. I suspect it's got a good chance to get up that far. That would be the area that you want to sell it and take some profits, and then again look for the retrace and decide what to do with it. So China also looking like it's got its first leg down and is starting out some sort of a consolidation as well. Now the question is, how long will consolidations last? The way consolidations typically work, and I'm going to go back to one of the European markets, I'll go to the CACs, is you get the first push down, it's a hard push, right? Because you've had a big run up. If we go back and look here, you've had a big run up. So just take this bottom and just do the math real quick. So 40.76, pretty much a straight run up to 42.69. So you went up 1,200 on 4,000. So if I do that math, that's got to be 28, 30%. Okay, so now you pull back off that high from 52.70 in a straight line move to 48.70. So you do 400. So you do a 10% pullback after a 30% run. Okay, so you took a third away. So now the question is, the way this usually works is you get a bounce back up, and then you come down and you probe this low the next time. And then you find out whether or not this is going to consolidate in a higher range or if it's going to build out a bigger one, right? Is it going to take another third off of this thing? And so that's always the question. That's what you want to watch. You have to look at it, see how it trades into that. Maybe take a speculative position there with the idea that you buy it lower if you have to, maybe back into this bar, right? And so that's the way these things usually work. You don't know initially, you just simply don't know, whether this range is going to hold or whether it's going to expand to something else or whether it's even just going to get under it and then that's going to be it. So I want to trade this on these ideas, and that if it works, right, we should expect some sort of a range build out just like we got before that lasts for some period of time. And that period of time is where we can take advantage of it, let it bounce around 2, 3, 4 times, and then try to have a larger position by the time this thing tries to break out. And the assumption, of course, is that eventually this thing's going to continue the trend to the upside. Okay? So that's the idea. We'll try to trade it that way in both markets. And the reason you want to pick these kinds of markets is they have great support underneath them now. You've got QE going on. You got Japan QE. You've got China basically going to do QE again. And they're talking about even their own special brand of QE now. And you've got Europe doing it also. And so QE brings currencies down, pushes markets up. Let me see here. That's that. And then the markets, the U.S. markets, let's quickly take a look at those. And the S&P market was actually the strongest on Friday because the financials got going. And so if we look at these, what we see here on the S&P is that this thing came all the way back to the top. The range is still in effect. This is going to test the top side of the range one more time and try to break it out. And that's probably going to be difficult again unless these financials really take off. And let me pop over to the financials. You can see they had the big bar up. They had good earnings out of Berkshire Hathaway. They've got better um, forecasted earnings given what's happening in the bonds and interest rates going up. That makes their spread better. That drifts down to their bottom line and helps them in terms of profits. This still is a range though. If I look at it on a weekly, let me grab the weekly here. That range is coming up to test the swing point high, doesn't have the volume, and then it's got another high up at the top, and we'll just have to see if it can get up there. Now those highs don't have any volume, but the prior high did. These are all kind of clustered together, and so to me that's kind of the area of 25. This one's 24.78, and we're at 24.76. So this is going to test. We're going to have to watch it and see what it does, and then that will have a big effect on what the rest of the S&P does. Now, the bad part about this is if we look over to like the NASDAQ, not as strong. If we look at the index, definitely not as strong. And if we go to the Russell, even weaker. The Russell still hasn't even got back over the breakdown bar. It got over the last one, but still hasn't gotten over the one prior, which was a week and a half ago. Russell is actually still in a downtrend on this time frame, right? Doing a test. Now, on the flip side, the Russell actually held the first test of this, or excuse me, the second test of this swing point high on the weekly. That's also a good thing. And it got a hammer reversal with less volume. So the Russell may actually get some juice back up to the upside. But again, it really depends on what happens with the rest of the world. If they're in consolidations and they flip around and start coming back, our markets are going to do the same, and I suspect that is what's going to happen. The dollar looks range bound. Again, that's a good thing. That employment report on Friday, did push the dollar up, but as you can see, it went into this big bar again and really couldn't get anything going. Dollar still looks like it's going to be range bound. It's going to try to trade down to the bottom of this range, and so the dollar is building out a larger range, just like we're talking about with the, grab this here, so that range is about there. It's building out a larger range, just like we were talking about with the CACs, the DAX, and China and so forth. They come down, they make their first attempt down. That was here. They go back up, they test, they can't get over it. They come right back down and test again. And in this case, they break under it. This one's going to try to test the bottom of this bar. That's going to be the real test, this area down here. If that area holds and the dollar bounces back up, you've got a range trade taking place. Now this, if the dollar comes down, is a good thing for our markets. But what is it? It's a bad thing for other markets, because now those markets aren't seeing the currency devaluation, which has helped push them higher. So it's a catch-22, right? It helps domestic markets, it hurts overseas markets. And the question will be is which one tends to be the most pressing, I guess is the word I'm looking for. In other words, which one's really going to sway the day? Is it going to be domestic, going to keep us higher and we're going to be able to break higher and actually go higher? Or are we really going to get pulled back by the pressure put on overseas markets? And right now, I think the overseas markets have the upper hand, and I suspect it's going to keep us intact. Financials, I just talked about. The indexes hold their bullish trends on the daily charts, other than the Russell. And so, on each of those daily charts, they're still bullish. They haven't turned bearish yet or sideways. And the weekly on the Russell, I've already talked about, held. Small caps, they keep saying something's wrong with the economy. And, that's an issue. It continues to be an issue. It has been an issue. Will continue to be one. Bonds look to continue to struggle. Now, if these start to sell off, that's going to be hard on the market. It's doing a bearish retest regen now. It came into it on Friday, got into it on that employment number, and then reversed off of it. This looks to come back down and test this low again. And if you flip this over and look at it on a weekly chart, the big low is still lower. It hasn't gotten to it yet. That's the real test. That's where it looks like it still wants to go. And that's going to be, where the rubber meets the road. And given the ABCD structure here, it looks like it's going to undercut it, scare the pants off of everybody, potentially, right? and then potentially reverse back up. So it looks to me like it's going to get under it, and it's going to scare everyone, and probably come down to this 116 area, maybe 117, somewhere in here, and then that's going to be where it finds its support, and then it too has built out what will be, on this time frame, a much larger range. That range looks like this in my mind, and so that looks to be where it's going to try to trade to, is the bottom of that range. And most people are going to be looking at this big bar, or looking at the fact that it's an ABCD down, and in that you're getting lower highs, lower lows, all that kind of nonsense, when in fact it's just building out the bottom of the range. And we'll watch it. But this again could be a cutting sword, in that it scares the general markets, in that the bonds and interest rates are going up. Fundamentally, the positives still the central bankers around the world. We kind of jotted that up here earlier. And the mergers and acquisitions continue. I mean, there was Yelp is talking about getting taken over, selling itself. CRM looks like it's a potential takeover. Monsanto's trying to take over. And Alexion is trying to take over. This has been a big deal, continues to be a big deal, and is supportive of the markets. If I look at the fundamental negatives, world growth still sputtering, earnings are done. Where's the next catalyst? And the equity fund outflows this year continue to be heavy, the largest since 2009. What are we going to watch? We're going to watch those bonds, we're going to watch the Russell, and we're going to watch the financials. Those, to me, are probably going to be the keys. And actually, we could add in one more as I'm thinking about it, and that is bounces in Europe and Asia. How far do they carry? And basically, do they fail, right? If they fail and come back, that again is going to put pressure back on us, I suspect. And given the currency situation, I suspect that is what's going to happen. It's going to be a very light week. There is BOE and ECB. There is the potential, given that we could see, some pressure on the currencies, because I am sure the ECB is going to talk up more QE, and that could put a floor under the euro, a ceiling on the euro's rise. Bottom line, earnings season is pretty much done. I don't see another catalyst for us, and it was mostly a bust. Despite that, prices have moved sideways, not down, and I suspect a big part of that is a result of the financial engineering that keeps happening. This year we're set to make the highest buyback totals, since, again, the 2010-2009 period. Well, actually, it's not that far back. I think it was like 11 when the buybacks. I'm sorry. I'm thinking about the other thing. This would outdo last year. Last year was the biggest, right? It looks like it's going to overrun last year, which was the largest we've seen historically. So buybacks continue to be a big part of what keeps this market up. A second part of that is the strong world markets that's keeping us up as well. I would note two things. And this is something that's not as easy to see. There are some other ways to look at it. In the neoclassical, what I see is the internals are not healthy, and I can see that from the trading signals, the way that they show. Most of what I see in terms of breakouts are breakouts from stocks that have been beaten down. The other thing that I see is when I look at the post-earnings trades, and I look at those all the time. I think you're aware, you can look at them as well. I keep a list for you on the watch list. So if you're logged in and you come to the watch list, you'll see these earnings. It will have my name in front of it because it's shared. You'll see these earnings, and if you go and look at April and look at these earnings, you're going to find that almost half of these, something like 47%, I think, were bearish, right? So you're getting almost as many bearish setups as bullish ones. 47% of them were bearish. That tells me that this market is very mixed, right, and has no catalyst to the upside. Okay, so moving on to the portfolio. As you know, last week we cleaned house again. We took a slew of things, took profits on them. We got stopped out, unfortunately, at a small loss on the SH. Added Asher on a pullback, and we're going to look to add back to DXJ, HEDJ, the position that we have here in HEWG, and potentially in the currencies if they move higher, especially in front of that ECB number. If we look at the individual stocks, there's really not a lot to look at. We will look at Asher together. Let's take a look at that one. You know, this is the Chinese market, and we were wanting to get into it on the pullback. We got in just a little bit early. It pulls back, and then, of course, Friday spikes back up. Remember, this was down 10% in the Chinese market. This one's coming back up. Looks to me like it's going to test back in. If you look at this from this perspective, you've got a consolidation area up here. You come off of that, you know, gap down. I suspect it's going to fill the gap, test back into it. And when I look at those bars, right, it just looks to me like it's going to get into the bottom of this, and that's probably where it would fail. That would be a close of that gap there. And so we want to sell some of it, not all, because you never know on these extremely strong markets if they're just going to continue. More than likely, it's going to build out a range and come even deeper in the range on the next pullback potentially, because you got all your volume down here at 44 area, and in this case 44. So this is extremely strong support back in this zone. And so what we'd love to do is sell some up here somewhere, let it come back, right, and buy it again, and maybe get it as deep as here and put on a much larger position and trade that, as we've talked about trading the core positions. If you look at the rest of the portfolio, there's really not much left in here. Let's look at SBucks. SBucks actually, which is Starbucks, hasn't traded as well as I wanted it to. It came back into the bottom of this bar on Friday and got rejected there, no volume. So we're going to try to sell it on any kind of bounce back up this week, sell part of it, keep part of it, and we really would like to get it on the next trip down back in this area. And so we'll see if it gets that deep. That would be the ideal spot. Next after that would be here. And again, just like we're talking about everywhere else, this is range building, right? It's building out these ranges. And as it does that, you want to try to buy the ranges. And actually, that's probably not the ideal range setup. Yeah, actually it is probably. That's probably the range. And that would actually take it down to almost this one, right, which is that lower range we're talking about. So if it comes back in, you know, you want to try to buy into these big volume areas here, which is another half of this range. Get a spike back up, sell some, you know, do it again. Keep building the position over time. I think that's about it. I don't have much else to say. The other positions aren't worth noting. I guess we could talk about Zeltique. You know, I didn't bring it up, but you know, Zeltique had earnings, laid big volume down here. It's going to come test it again. It could trade as low, and I suspect it will, to this 27 area. And the reason for that is if you look back over here, you know, the volume is 27.47. This volume is 27.04. That looks like an ideal spot to see this thing build back to. And if you look at it from a range perspective, right, the prior range was up in this area. So if you project that down, right, you could get as low as this next range, which again gets you back into those bars. And you know, so in other words, we could see it build out halfway, just like we were just talking about with Starbucks, which would be the top of these bars, and then bounce and then come back and settle it lower. And this is a wild one, so you know, it's an ideal case to buy and sell, because eventually, you know, this is probably going to trade. I mean, it could trade all the way back down to here, but eventually, you know, the ideal here is that this is still an uptrend. It's just consolidating, and you can trade those consolidation ranges as long as you have enough space in between them to actually trade them. And that's the idea. This is actually an ideal one to do that. All right, I'm going to leave it at that. Oh, one last thing. Let me not forget. I wanted to show you, not this, but I want to go to the site. So let me pull up the site for you right quick. So one of the things you're going to notice here on the front page is that if you come down here, there's an ETF portfolio now. and there's some trades associated with that ETF portfolio. These are ones I've been doing I've done them for longer than this, but I've started tracking them. So the last week, actually a couple of weeks, I've been tracking it, putting it in a spreadsheet, considering how to present this in a useful way. And I think it's ready for prime time. You might want to come over here and read the help. It tells you all about it, how it works, how the trade's going to work, what these things all mean. And how you can trade this portfolio if you want to, or use it as a bias if you're doing your own trading and simply want a bias or my bias as to what that market's going to do. I think that it's most useful if you have some flexibility to use it in conjunction with the TNT room, and we'll try to do that. So ETF portfolio trading, it's a day-by-day trading bias with some entries and exits, one day exit the next. Read about it here, and let's get this thing started off the ground and hopefully help you more. Okay, I do believe that's it. I'll leave it at that. Thanks as always, and I will talk to you in the coming week.